Hey guys, hope you guys had a good day trading. Another tough day trading today with the technicals and just another big rally. It seems like whenever we get days like this with just these huge green candles that we just have a really hard time with the technicals and getting a good trade down every time. So taking a look at the daily here, we pretty much have come into a really nice resistance zone right here at the 420 level. So you can see we had our top right here. This one was about 420.2, and then today we closed at 420.02. So this is the first official close over 420 since August. So big deal there. You can see we have the nice blue bear channel going right here that we did officially break through. So we can go ahead and get rid of that. So it's kind of just left with this big, broadened red rising wedge here, followed by this uptrend right now. So as you can see, breaking through 420 really takes us up to this 429.7, 430 range is what I'm looking for. And if you look back, that pretty much coordinates with the August high. So right now what we're doing is basically we finally broke over and managed to close over the top of Jackson Hole. So from here, we look to, and we actually do have a 421.22 gap that we have not filled yet. We're pretty close to that, but so we do have this nice daily gap right here that we're going to try to touch. So basically, if you look here, our next major upside level is right here at 422. From there, we start ticking away at 425. We got 428, and then we have the ultimate top right here at 429.7, which is the August high. So in theory, that's where we should go. Now, if this turns into a double top, or if we just reject the 420 level, we're going to look to come back down, and we have a lot of support down here in this 410 to 414 area. So we also have, if the chance here that we could go up in this area, establish a new supply, and then come back down and take out the supplies we have at 419 and 419.5. So it's kind of the upside trajectory I'm looking at. When you go to the weekly here, we have a really nice just double rising wedge basically. So what this basically means is we have our upper blue rising wedge, which is more broad, and this uses the November and January tops right here, and then obviously our current weekly low and then the March low. So if we follow this up here, next week, our major resistance is going to be right here at 425.2, and our major support will be all the way down here at 412.8. Now, the blue support rising wedge resistance is actually all the way up at 434.7. So basically, as you can see, there's a lot more upside. If you kind of just follow this broad and rising wedge we're in here, you can see by pretty much July, we start looking at the 430 to 440 range. And as you see, we have our August top back here, which is right there, that 427.7 on a weekly time frame. So basically, if you look here, we kind of had our big channel down here in this 482 to 411.6 range. And now we're trying to break out, and we're going to try to test the waters up in this 411 to 427 range. Looking at futures daily, a lot of the same stuff here. So you can see we did go ahead and break through our blue rising wedge, or sorry, blue bear channel here. And now we just have our red rising wedge, and we have our black kind of extreme bull channel, you could really call it. So you can see that gives us a resistance pretty much perfect with the red rising wedge at 42.36, and our support's all the way down here at 41.62 for Monday. So the kind of little bit of a difference here on SPY, you can see our rising wedge is quite a bit more steep, but if you look at futures, it's much flatter. So that's definitely something to keep in mind as we go through the week, that futures has, obviously futures and SPY are the same, but shows a little bit more limited upside than SPY does. However, our major upside for this channel is all the way up at 43.10. Now, if we go over to futures here on the weekly, we do have the same channel or the same rising wedge. And you can see here our rising wedge on futures compared to SPY actually looks like we're coming more to a decision point than it does on SPY. So for futures, our upside for the blue rising wedge, that's the upper limit, is 42.73. but our black one is all the way down here at 42.42. So basically what that shows is that on futures, this does appear to be topping or slowing its roll at least compared to SPY, which shows that it has a lot more upside to go. Now support wise, we have all the way back down here at this nice 41.30 33 area. So basically same thing here on SPY, our futures as SPY. We did a lot of trading in this 38, call it 3900 to 4134 channel, which is right here. A lot of trading has happened here over pretty much the last 6 months, really. But now we're attempting this breakout, and our upside here is all the way up at 42.83. So something interesting as I have highlighted right here is the 4,300 mark. So 4,300 is the JPM collar sold calls. Now, I mentioned this before that this is week 7 of the post-collar roll. Now, historically speaking, whatever way the trend goes, it does have a tendency to revert. Now, there are times in the past where that trend, instead of reverting, has accelerated. And I guess if you look at the last really 8 weeks of trading, it's been nothing but flat. So this could be the breakout of the trend, which would be to the upside. So if that's the case, you can see until pretty much the middle of June, we're looking at a possible rally for about the next 3 weeks here. So keeping an eye on that for sure. Take a look at the VIX here. Kind of interesting day here in the VIX. So we had our upside bull channel on the VIX. We obviously lost that. So if you take a look here, we're basically establishing a new falling wedge here. But what I find very, very interesting to me on this is the fact that, and if you watch the intraday, is just the way the VIX behaved compared to the way SPY behaves. So this morning, basically the VIX completely just sold off. It was down about 10% at its max low, I think. But what was interesting was around 11:30, the VIX actually just basically held flat. And then pretty much from 11:30 to end of day, the VIX actually started to rise, which is interesting because obviously if you watch SPY today, what happened was SPY continued to rise throughout all of that. So basically what you ended up having was the VIX selling off, or the VIX rising, I mean, while SPY was rising. And again, it can happen, but it is very uncommon to watch the VIX and SPY inverse each other, basically. So what I found was interesting here is that the VIX, after coming up here to this 20.8 mark, it rejected, and I was telling you this 20.1 was a very significant level. It rejected, we came down here, and now I said that this 18.54 was a big level, and then I had 17.97. So what you see here is we actually came down and we almost came all the way back down to 17.1 before we bounced. But after this bounce, we actually closed pretty much just a couple cents below that critical 17.97. We also managed to close over the daily 20 EMA. So what will be interesting here is if the VIX will bounce back up on Tuesday. So something that I think was very interesting today was middle of the day, there came out some article basically saying that the debt ceiling had a handshake agreement, basically meaning that they had an agreement. Now, SPY had already rallied before that news came out, but I found it interesting because that seemed to me to prevent the sell-off and the reversal that was coming on SPY. So if you watch technicals, there's just certain things that set up that show pretty high probability reversals to the downside, and pretty much almost all midday today that was primed with about the best textbook reversal we will ever see on the 1, 5, and 15-minute time frame, and on Volt and VIX all at the same time, yet SPY continued to push up. So that is an absolute anomaly. So what I'm going to be interested in is now that pretty much after tonight, my understanding is that they're going to recess until Tuesday because it's the 3-day Memorial Day weekend. So if they don't have a debt ceiling agreement by tonight, then that pretty much means Tuesday and Wednesday are their last 2 days to really get this done. So they're very well, when we open on Tuesday, could be a pretty bearish reaction in the markets, we could see a very big spike up on the VIX and a very big gap down on SPY as markets are nervous for a possible default. Now, is that going to happen? Realistically, I don't think we're going to default. I think that would be pretty much suicide by, obviously both sides of the Republicans and Democrats. But crazier things have happened in our lifetime, so we've had plenty of once in a lifetime moments here, so it could definitely happen. Going over to QQQ here. So on a weekly time frame, what I'm watching here is we pretty much have this just incredible bull channel. So you can see we are coming into now the April. So this was the August high. This is basically what SPY is trying to get to right now. So we're looking back at April right now on QQQ. So that next major level is 362.9. And you can see to this week, and we pretty much came down. We bounced right off the weekly AEMA, and you can see this weekly AEMA is actually perfectly following the support line. Anytime that happens, this is one major support line. So our projected upside, using basically this support line with the highest point right here, and we could probably go all the way up here, but that would be a little too extreme, would be right here for next week at pretty much 361.5. So that's right on top of that April high right here at 362.9. From a standpoint of momentum and a couple other indicators to look at, I would not be betting against QQQ. I absolutely expect it to be in the 350s and probably 360s next week. So I don't have it charted just because it's been so long since we've been up here. But if you look, our next major upside targets are going to start basically being all-time highs. So if you look back here, this is November. So our all-time high is 408.7. So I don't think we're going to get up there, but I would not be surprised to see us get in this 370 to 380 range if we start breaking through this 360. So it's really pretty incredible if you think about it. I mean, from a weekly standpoint, this is pretty much just if you threw on, this will really visualize it for you guys here. This is basically just, and you can even go more extreme if you wanted, but this is just one massive weekly V bottom on QQQ, which if this is truly a cup and handle, then, we really could see all-time highs on, 399 area, 400 area on QQQ before we start retracing. Now, I don't think that's going to happen. Again, I think that what's basically happening, if you watch tickers, like individual tickers throughout the week and stuff, pretty much for the last week, one ticker or maybe two of the big caps, like talking Apple, Microsoft, Google, Amazon, Tesla, Meta, NVIDIA, pretty much one of them all week has had some sort of massive gain. So today, Amazon and Tesla both closed up over 4%. Tesla was up at like 7% at one point, and I think Amazon was over 5% at one point. So basically what's happening is, obviously what happened with NVIDIA yesterday. Basically what's happening is just one ticker every day is pretty much carrying the load. So what it seems like is happening is that there's just so much extra money on the sidelines, and it feels like at this point it's becoming a FOMO rally, where basically this big money that's on the sidelines doesn't want to miss the next 10-20% move up, so they're just throwing money in right now. And I think they realistically know that the upside is limited, but at this point, it's like, obviously you cannot short this, and I would highly not recommend shorting any ticker right now. But it's kind of like, do you want to just sit cash and watch this ride up another 10%? Or do you want to jump in and grab another 5, 6, 7%? So in my opinion, that's kind of what's happening, is there's just a massive rotation. And kind of something else that happens too, and I've talked about a couple of weeks ago, is that before basically the end of the bear market rally and before the big crash happens, generally, what does everybody do? They pile into safe tickers, which big caps are pretty much about as safe as you can be. So where are you going to put your money if you don't know where to put it right now? Well, you're just going to throw it into a big cap that that in 10 years, even if this crashes 50%, it's going to be back eventually because it's a big cap, and big caps always recover for the most part. So, look at Apple, Microsoft, Google, all them over the last however many crashes that since they've been around, they always make a new all-time high. So if you're at near all-time highs, what's the best thing to do? Put into a big ticker that you know is going to survive in the long run. So in my opinion, that's kind of what's happening right now is people got tired of sitting cash and now they're starting to see these rallies and they're just kind of picking a big ticker, and that's what's causing this continued chaos basically. So, all right, hope you guys have a good 3-day weekend, and I will talk to you guys on Tuesday.